Hello and welcome to Cargo Shots from the Stat Trade Times, powered by Group Concorde.
This is Nehal Gautam and you're watching Cargo Shots, where we bring you the top headlines of the week. UPS takes over as USPS primary air cargo provider, replacing FedEx. The United States Postal Service, or USPS, has awarded a major contract to UPS, essentially making them the primary air cargo provider for domestic mail. This is a significant shift as FedEx has held this contract for over 20 years. Their current agreement with FedEx expires at the end of September 2024. UPS will be working through a transition period to handle the majority of USPS air cargo. FedEx, on the other hand, acknowledges the ending of this long-standing relationship in a recent filing with the Securities and Exchange Commission. They say they'll be making adjustments to their network to improve efficiency and flexibility in the wake of this change. They also anticipate these adjustments will lead to improved profitability in the coming fiscal year. Virgin Atlantic expands cargo capacity, offering 43,000 tons for India routes to meet the growing demand. Virgin Atlantic is boosting cargo services between India and the US with new direct flights connecting Bengaluru to San Francisco, Los Angeles, New York JFK, and Seattle via London Heathrow, alongside a second daily flight to Mumbai. This expansion adds 25,000 tons of cargo capacity, catering specifically to the fashion, pharmaceutical, and technology sectors. This brings their total India cargo capacity to 43,000 tons, a massive 336% increase compared to 2019. Beginning October 27, 2024, the second daily Mumbai service will operate on the airline's A350-1000. Despite a recent cargo revenue decline of 48%, Virgin Atlantic seems confident, celebrating its 25th anniversary next year and offering over 1 million seats to India, especially targeting US tech hubs like San Francisco and Seattle. Hactl launches autonomous ramp vehicle operations. Exciting news from Hong Kong air cargo terminals. They have inked a deal with Westwell Holdings to introduce autonomous electric tractors, or AETs, to their operations this year. These vehicles will autonomously tow cargo dollies, couple and uncouple dollies, and adjust to varying specifications, enhancing efficiency and reducing manpower challenges. After testing, they'll be integrated into existing operations, initially handling import cargo on a specific route. With a range of up to 75 km per charge and zero emissions, they'll bolster Hactl's carbon reduction efforts and even improve efficiency by freeing up staff for other tasks. Air cargo demand maintains double-digit growth in February. In February 2024, the International Air Transport Association reported robust growth in global air cargo demand, up by 11.9% compared to February 2023, marking the third consecutive month of double-digit year-on-year growth. This surge is fueled by thriving international traffic, propelled by booming e-commerce and increased interest in sea-to-air services amid maritime shipping constraints. Meanwhile, available cargo capacity rose by 13.4%, largely attributed to increased passenger market belly capacity. With a 0.9% expansion in cross-border trade, air cargo demonstrates resilience amid global uncertainties. Saudia Cargo broadens e-commerce logistics presence through Shenzhen launch. Saudia Cargo expands its reach into China's e-commerce market by launching 2 weekly flights to Shenzhen starting March 15th. This move underscores the airline's commitment to growth in one of the world's most vital markets. Leveraging Shenzhen's significance as an e-commerce hub with major e-commerce players such as Alibaba, Tencent, and TikTok, and partnerships with major players like Changyao, Saudia Cargo aims to provide seamless logistics solutions. With Riyadh being Saudia Cargo's lucrative market for Chinese businesses, the expansion into Shenzhen presents significant opportunities in the e-commerce sector. It also strengthens trade connections between China and Saudi Arabia. GE Aerospace to invest $30 million for expanding Pune facility. Fresh off its New York Stock Exchange listing, GE Aerospace is set to invest over $30 million into expanding and upgrading its Pune manufacturing facility. This investment will allow them to introduce new projects and processes with the help of new equipment and specialized tools. Inaugurated in February 2015 by Indian Prime Minister Narendra Modi, the factory specializes in manufacturing components for commercial jet engines. These components are then shipped to GE's global facilities for assembly into various engines, including the G90, GE NX, and the world's most powerful commercial jet engine, the GE9X. Additionally, the factory produces parts of LEAP engines, a product of CFM, a joint venture between GE and Safran. This investment highlights GE Aerospace's commitment to India's growing aerospace industry. The facility has already trained over 5,000 people in specialized manufacturing. Closing out the week, these stories stand out as the highlights in the world of air cargo and logistics. For your weekly news fix, stay connected with our YouTube channel. Until next week, thank you for tuning in, and we look forward to bringing you yet another insightful weekly roundup.